Dear valued investors, welcome to Market Insight BRI Manajemen Investasi. In this session, we'll explore the latest market updates and uncover emerging trends to help you make informed investment decisions. United States Zone. The Fed announced another 25 basis points cut to the federal funds rate in December 2024, marking the third consecutive reduction this year and bringing borrowing costs to the 4.25% to 4.5% range, in line with the expectations. The so-called dot plot indicates that policymakers now anticipate only 2 rate cuts in 2025, totaling 50 basis points. The Fed also revised its GDP growth forecasts upward from 2024, 2.5%, 2025, 2.1%, while remaining steady at 2% for 2026. Similarly, PCE inflation projections have been adjusted higher for 2024, 2.4%, 2025, 2.5%, and 2026, 2.1%. On the other hand, unemployment is seen lower this year, 4.2%, and in 2025, 4.3%, while the forecast was kept at 4.3% for 2026. The U.S. economy expanded at an annualized rate of 3.1% in the third quarter of 2024, higher than the second estimate of 2.8% and above the 3% growth recorded in quarter 2. This marks the highest growth rate so far this year. U.S. personal income rose by 0.3% month-on-month in November 2024, the smallest increase in 3 months. Meanwhile, personal spending in the United States increased by 0.4% month-on-month versus 0.3% month-on-month in October. Indonesia Zone. Indonesia's trade surplus jumped to $4.42 billion in November, up from $2.41 surplus in October. This marks the largest trade surplus since July, primarily due to a surge in exports. Exports grew by 9.14% year-on-year, while import increased by only 0.01% year-on-year in November. Bank Indonesia maintained its benchmark rate at 6% during its December 2024 meeting. The decision was aimed at stabilizing the Rupiah exchange rate amid heightened global Indonesia's consumer uncertainties. Loan growth in November recorded 10.79% year-on-year, easing slightly from a 10.92% growth year-on-year in October. The growth of M2 money supply for November will be released this week. In October, M2 money supply grew by 6.7% year-on-year. As long as it continues to post positive growth, this indicates that economic activity remains on a positive trajectory. Market view. Jakarta Composite Index declined by minus 4.65% week-on-week to 6,983.87. The JCI is expected to remain in positive territory until the end of December, as the Rupiah exchange rate against the dollar has reached 16,000 Indonesian Rupiah level and is likely to strengthen due to Bank Indonesia's intervention to keep the exchange rate below 16,000 Indonesian Rupiah. Additionally, banks have reported performance for November that is relatively in line with expectations. Foreign investors recorded net selling of 4.09 trillion Indonesian Rupiah over the past week, bringing the year-to-date inflow to 15.84 trillion Indonesian Rupiah. The 3 sectors with the steepest declines in returns were basic materials, properties and real estate, and technology, which decreased by minus 8.21%, minus 6.14%, and minus 5.63% respectively on a weekly basis. On December 20, 2024, the yield on a 5-year benchmark government bond, FR0101, increased to 6.96%, while the yield on a 10-year benchmark, FR0100, remained flat to 7.05%. The yield on a 15-year benchmark, FR0098, increased to 7.11%, and the yield on a 20-year benchmark, FR0097, rose to 7.12%. The yield on a 10-year Indon bond, Indon 34, rose to 5.37%, while the 10-year U.S. Treasury yield also increased to 4.52% compared to their levels on December 13, 2024, which were 5.12% and 4.39% respectively. Indonesia's risk premium, reflected by the 5-year CDS, climbed to 75.77 basis points. Meanwhile, the Rupiah depreciated by 1.31% week-on-week to 16,222 Indonesian Rupiah. As of December 16, 2024, foreign ownership in the government bond market was recorded at 883.11 trillion Indonesian Rupiah, 14.65% of the total outstanding, nearly unchanged from its level on December 13, 2024, which stood at 883.86 trillion Indonesian Rupiah, 14.66% of the total outstanding. The Fed adopted an expansionary monetary policy in 2024, lowering the benchmark interest rate by a total of 100 basis points year-to-date. The U.S. economy remains on track for a soft landing, with growth projected at 2.5% year-on-year in 2024 and 2.1% year-on-year in 2025. Similarly, Bank Indonesia is expected to implement an expansionary monetary policy in 2024, which is anticipated to positively impact Indonesia's economic growth. That concludes today's Market Insight. Stay tuned for more updates and follow us on social media. See you next week in the Market Insight BRI Manajemen Investasi.